Hello traders, welcome back to another episode. In this video, you will be learning how to analyze the price properly using the smart money concept on a multi-time frame analysis. You'll be learning how to go to the higher time frame, how to identify the direction of the price, which is very important. You'll be learning how to mark your break-off structures, how to mark your point of interest, and then how to go all the way down to the low time frame, refine your point of interest like the demand or the supply zones, and then you're gonna go to the 15-minute time frame, and then after that you'll be waiting for a change of character, get into the trade, target your closest zone that you can target. All right, so this is going to be very simple. For those who don't know what smart money concept trading is, it is the best way to trade, in my opinion. I think it's the best way to trade, basically, in my opinion, because you learn the markets in a deep fashion. So without wasting your time, let's get into the charts. All right, here we are on the Euro USD using the TradingView platform as usual. So this is the daily time frame. You can go to the lower time frame like the 4 hours, but I'm going to show you guys from the higher time frame point of view, and then we're going to scale down to the low time frame until we find that entry. So here, before this uptrend here, we had a downtrend market. We had the price creating lower highs, lower lows, and giving us that break of structures, and after that we had a change of character. So here we have the price giving us lower highs, lower lows, lower highs, lower lows, lower highs, lower lows, lower highs, lower lows, lower highs, and then lower low. So this was our last lower high led to the lower low. Basically what it means is every low is lower than the current, every low is lower than the previous low. So this low is lower than this low, so all the lows are lower than the previous lows, and then all the highs are lower than the previous lower highs. So this is a downtrend market structure. So after that, what we're gonna be doing here is we're gonna be marking our change of character. So what is a change of character? A change of character simply means a reversal. It is not a fancy thing anyways. It is very easy. It's just a name. A change of character simply means a reversal. So the price went from a downtrend to an uptrend. But how? So here we have our last lower high led to lower low, breaking this structure here. After the break of the structure here, we had a lower low, okay? Lower low. So this lower low, where it came from? It came from over here. So this is our last lower high led to lower low, and then after that the price started breaking it to the upside. So here we have a change of character, or a reversal in a very simple term. All right, after that the price started going up. If you look at here, we don't have any imbalance, okay? We don't have no imbalance and nothing. The price started going up, creating little high highs and high lows until we have our first inducement taken out. So what is an inducement? Okay, the first higher low that's taken out is usually called inducement. Okay, inducement is basically persuading or tricking traders to get into a position, and then the market is going to go on the other way. All right, so the price give us a change of character, started going up. So over here we have another break of structure, another small break of structure. So this is our last break of structure here. Okay, this break of structure here, and then price started creating a higher highs, another higher low, another higher high, another higher low, another higher high. So this one here, this first higher low that's taken out is called inducement. All right, so I just make the name short. IDM stands for inducement. All right, so after that, before the break of this structure, what we have is we have our demand zone, or our point of interest right here. Okay, we have our point of interest right here, but this is a very huge gap. So if you enter a trade over here, your stop loss is going to be very wide. So what we're going to be doing now is we're going to be going all the way down to the 1 hour time frame, and we will refine this demand zone here. Okay, we will refine it and make it as small as we can. All right, so all the way down to the lower time frame, like the 1 hour time frame, you see the zone is huge. It's almost like, let me see, this is almost like how many pips here? 138 pips. So you don't want to be trading this big zone here. So we're going to be doing it now. We are on the 1 hour time frame, and we will refine our demand zone. So on the 1 hour time frame, we have our break of structure here. So before the break of structure, this is our demand zone that's not mitigated or touched yet. So the price started breaking to the upside, but this area has a lot of imbalance. As we can see, there's a lot of imbalance from here to here, right there. So there's a lot of imbalance sitting here. So therefore the price will probably come back here and give us that, an entry. So now that we refined our zone and made it as small as we can, now we're gonna go all the way down to the 15-minute time frame. All right, we see that the price is already tapping on our demand zone on the 15-minute time frame. And now what we're gonna be doing is we're not gonna take a trade until we get the change of character, which is a sign of a reversal from a demand zone or a supply zone, or even an order block. An order block, demand zone, point of interest is all the same at the end of the day. All right, nothing is complicated over here. They just have different terms and different conditions, but they are the same generally, because that's where you are entering the market anyways. So now that we are on the 15-minute time frame, we're going to be waiting for a change of character. So over here, as you can see, we have lower high led to lower low, breaking this structure, clearing all the liquidity that's sitting over here. So this is a break of a structure and a liquidity zone at the same time, because the price came over here, took out all the liquidity that was sitting over here, and it started reversing right away. But what we're going to be focusing here is we are focusing this lower high that is taken out and turned into a change of character. All right, so this is the last lower high led to the lower low before the wipe of this liquidity sitting here. So now what we're going to be doing is we're going to go ahead and mark our demand zone, and the condition is it has to have what you call an imbalance. All right, so we can see the big push over here, and we can also see the imbalance. Okay, so now we're going to go ahead and mark our area here. So what we're going to be doing now is we're going to be waiting for the price to get back to the zone and give us an entry. Now we have a confirmation that the price wants to reverse and go to the upside. The sellers are exhausted and the buyers are trying to take over the market to continue to the upside. Okay, now we mark our demand zone here, just like we did on the higher time frame, because anytime we get a break of a structure, we have to mark our demand zone, or you can call it point of interest, order blocks, imbalance, whatever it is, you have to mark it. Okay, so now we wait for the price to get back to the zone. All right, continue here. So here we have the price coming back to the zone. All right, right after the price hits the zone, what we're going to be doing is we're going to be taking the trade before even this candle is formed. We can take the trade right away. All right, now we're going to go ahead and grab our long position indicator here. We're going to put it on the chart. We're going to put our stop loss right below the demand zone here. So that's going to be about 11 pips, and we're going to be targeting this zone here. This is our closest zone that we can target. We can take our first profit over here, and then we can take our second profit, this zone here. Okay, so this is going to be the first profit, and then our second profit will be the second structure there. All right, still going, still going, still going. All right, so now the price almost met our first take profit. Okay, still going. All right, now we have our first take profit hit right here. So now we're waiting for the price to go to our second take profit. We can see that the price is giving us that, higher highs, higher lows for indication of an uptrend. All right, you already took your first take profit, and then now you're targeting your second take profit. Okay, finally you have the price tapping on your second take profit. So this was very easy. So let's just recap. Okay, so what you learned in this episode is basically you went to the higher time frame, like the daily time frame or the 4-hour time frame. You identified the direction of the price. You identified the change of character before the reversal to the upside, and then now you identify that the price is in an uptrend market, and then you started marking your break-off structures. After you break off structure, you mark your demand zone. After you marked your demand zone, the price started giving you small or mini higher lows, higher highs, and then took out your first higher low here. So the first higher low is always the inducement, or you can call it IDM, and it is always found on the left side of the price. So this is the left side of the price, and when the price reverses, the first higher low that it took out is called inducement. So now once the inducement is taken out, we know that the price is trying to come over here and give us that entry. Once the price hit this entry, we went all the way down to the 1-hour time frame. We refined our demand zone, and then we went out all the way down to the 15-minute time frame. Once we hit the 15-minute time frame, the price came back over here. It gave us change of character, because this is the last lower high led to lower low. Give us a change of character just like it did on the higher time frame, and then we marked our demand zone after the change of character, and then we waited for the price to come back to the zone. The price came back to the zone. We enter into the market. We take a trade, and then we put our stop loss right below the zone, and then we target our first take profit, this base here. So this was a base drop for those who know that. Okay, so this is our first area here. So we target our first area because we know this is a hiccup, and the price can stop from here and then give us that little bit of reversal and then continue to the upside. So in this case, we can see that the price was giving us that higher low to maintain that higher and higher time frame structure alignment. All right, we can see that the price was giving us higher highs, higher lows. Okay, higher highs, higher lows, higher highs, higher lows, and then higher high until it hit our second take profit. All right, so guys, if you're brand new to the channel, please go ahead and subscribe. Make sure you like the video. Make sure you share this video with your friends who are also struggling in these markets. It might seem very complicated, when you hear about change of characters, break of structures, inducements, imbalances, supply and demands, market structures. But trust me 100%, be patient. Do not, rush. Take your time. The market will always be here no matter what. If you're still alive, you will always have the opportunity to make money from these markets. So rushing and thinking about get rich quick scheme, it's not going to work in this market. In Forex, you have to have patience. That is what I learned when I came into the Forex market. After years of trying, I've realized, this market is not about rushing. You have to be very patient, and you have to be very resilient, and you have to not give up ever when it comes to the markets, because this is where you find your freedom opportunities, and where you can save your time from giving it to someone else rather than spending on yourself. All right, so guys, thank you very much. I have an ebook that I have written that explains everything that has to do with the smart money concept. It has about 103 pages. You can find the link of the ebook in the description below. Thank you again. Until next time, this is your brother Jamal. Peace out.